So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be answering the question, how do you convert an iron condor into an iron butterfly? So let's start off with the basics of the iron condor, right? An iron condor is when you're selling two credit spreads, one on either side, the call spread and the put spread, to create this iron condor payoff diagram. So for example, if a stock was trading at $100, you might sell the 105-110 call option spread, and you might sell the 95-90 put option spread, right? So on either side, you're doing a $5 wide spread, about $5 from the market. Very simple concept that we can use for our purposes here today. So when you start converting an iron condor into an iron butterfly, what we want to get to is we want to get to that iron butterfly payoff diagram, which looks more like a pyramid type shape on your P&L graph. And that's where you have your short strikes at the exact same strike on the call and the put side. So with an iron butterfly, you would be looking to adjust by rolling up or rolling down, whatever side is the unchallenged side, to the point at which the short strikes are exactly the same on one side or the other. So again, using our example, let's say that the stock is trading at $100. We sold the 105-110 call option spread, and we sold the 95-90 put option spread. So if the stock starts to move higher, then we would roll up our put spread side to something like the 105-100 put spread. So if we did that, that would give us short strikes at 105 for both the calls and the puts. And that's what creates the base of this iron butterfly payoff diagram. Now, if the stock were to start to fall, we would not adjust the put side. We would actually roll down the unchallenged or untested side, which is the call spread side. And we might roll down that side to the 95 calls and the 100 strike calls. Again, now in this example, we have the 95 strike put acting as the same strike for the calls and the puts. So it gives us our payoff diagram with that kind of rising peak or pyramid type shape at the 95 strike. Again, the mechanics of this are really easy. If you are trading the original iron condor, you would just simply close whatever spread you're adjusting and reopen a new one at the closer strike prices. So if you're rolling up the puts, you close your put spread, take basically side, and then reopen a new put spread, same number of contracts, same width of the strikes at the much higher strikes that we talked about earlier. Same thing on the call side. You would just simply close the call side if you're rolling it down, close it out, physically exit the position on that side of the trade, and then reopen your new strikes. So it does take a little bit of time to get it right. That's not the easiest adjustment in the world by any stretch, but it is very logical why we do this to increase our position credit that we take in. Also take advantage of the market direction. Wherever the market's going, we're going to kind of fade and play the market by adjusting the unchallenged or untested side. And we also take an additional credit, which reduces risk. So there's a lot of rationale behind why we do it this way. I think once you actually start to adjust these just one or two times, you'll understand kind of the concept and really get it. It's like riding a bike. You start pedaling and balancing, it really kind of comes naturally. So if you guys want to learn more about these, again, we have training and video courses on adjustments, not only for iron condors, but also for iron butterflies. We've also done a lot of these live trading videos that you can all find in the education dropdown on optionalpha.com. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from optionalpha.com.